Wall Street, Main Street, and Washington, D.C. might not always agree on the same things, but there has been focus on politics, and this does come as many Americans have been distancing themselves from the White House, especially on the heels of President Trump's comments on Charlottesville. Now, we saw the dismantling of the councils that were formed by President Trump, so joining me today is Alan Valdes, and he will weigh in on what we're seeing in terms of politics. Alan, great to have you here today.
Remy, thanks for having me. You know, you're 100% right. This was a little disconcerting for Wall Street, for the business community, because now you're having corporate leaders leave the two councils, and he disbanded them. He had to finally wind up disbanding. But now is corporate America losing faith in Donald Trump? I mean, basically this market's been rallying because they were behind him with the tax cuts, the infrastructure, deregulation. Now you got to wonder, things starting to change a little here. We see the market off today, but now we got this internal turmoil where he keeps festering on. So I think overall he's got to be careful here. He's got to get the infrastructure. He's got to get the tax cuts, focus on that, and I think you'll see the markets move ahead. Another problem for this market, earnings season is coming to an end. We got a great earnings season. It's been the driver of this whole summer rally. Now that's coming to an end. We're coming into a very volatile month, September, so we'll have to wait and see, and I think you're going to see the market kind of trade flat to down a little on light volume. As traders step back the end of the summer, they may not be involved the rest of the summer.
Well, Alan, we do know that geopolitics as well as politics will remain at the forefront because it does affect businesses. But as we head into the rest of this month as well as next month, the Federal Reserve will be in the spotlight. Now, we saw the Fed minutes and we saw the U.S. dollar fall in the aftermath of those minutes. But today the dollar is higher, and the euro got hit on ECB minutes. Now, we have that fun gathering in Jackson Hole, Wyoming, known as the Fed Symposium coming up. What do you expect from that gathering?
You know, I think, it seemed after yesterday's notes that this Fed split. Half want to raise, half don't want to raise rates. But I think you're going to see them raise rates by December. They'll all come together. I think the market, despite Washington, is going to stay strong. Remember, the fundamentals are strong here. Jobs number today came in down 12,000. That was a good sign. Factory output was a little weak, but that's because the auto industry's got slower. We knew that would happen probably. But I think overall the market's going to stay pretty robust only because, again, earnings were great. Job growth has been stronger now than in previous years. So things are getting better in America on that front. Will it continue is the big question, but I don't see it falling apart, between now and December, put it that way.
Well, Alan, that's interesting you mentioned that because we did get mostly better than expected economic data this week on all fronts. And in terms of earnings, there are no surprises when it came from the retailers. Target, Walmart, their online strategies did help them in terms of results. So as we head into the rest of this year, do you expect continued improvement in the retailers that did well this past quarter?
Good point. It's going to be hard to see because I'll tell you, the big players, Amazon, and you saw Walmart. This online sales were up 60%. 140 million Americans shop weekly in Walmart. So those two guys take a lot of wind out of the sail of these other big retailers. So I think you might see a hit on some of those big retailers coming into the school and then, of course, the all critical holiday shopping season.
Okay, Alan, well, thank you so much for weighing on politics as well as shopping today.
Thanks, Remy.